Hello everyone. Welcome to the Stock Minds web channel. In the ever-volatile world of biotech and rare disease therapeutics, certain companies stand out by not only delivering promising clinical results, but also showing striking financial turnarounds. Zevra Therapeutics, NASDAQ ZVRA, is one of those names. As of Q2 2025, the firm has reported explosive revenue growth, swung from prior losses toward profitability on some metrics, and in the eyes of many analysts, remains significantly undervalued relative to its potential. In this video, we will dive into Zevra Therapeutics' recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Zevra Therapeutics. Zevra Therapeutics, headquartered in Celebration, Florida, is a biotechnology company focused on developing and commercializing treatments for rare genetically based diseases with high unmet need. Founded in 2006 as ChemPharm, it rebranded to Zevra Therapeutics and adopted the NASDAQ ticker ZVRA in February 2023. Its mission is to deliver transformational therapies through scientific innovation and strategic regulatory planning. Key assets include Miplyffa for Niemann-Pick disease type C, KP1077 for idiopathic hypersomnia, Azstarys for ADHD, and Olpruva for urea cycle disorders, all benefiting from orphan drug designations and premium pricing opportunities. Zevra financial performance. Zevra Therapeutics posted outstanding Q2 2025 results, reporting revenue of $25.88 million, a 481.73% surge from $4.45 million in Q2 2024. Quarterly EPS climbed to $1.21, up 352.08% from a loss of 48 cents a year earlier. On a trailing 12-month basis, revenue reached $62.02 million, reflecting a 161.81% increase from $23.69 million a year ago, while TTM EPS improved to -7 cents from -$1.70, a 95.88% gain. On the profitability side, the company maintained a strong 71.96% gross profit margin, despite a -6.3% net profit margin, with return on assets of -1.52%, return on equity of -3.33%, and a moderate 0.53 debt-to-equity ratio. Over the past 5 years, Zevra's revenue and net income have fluctuated prior to Miplyffa's approval. Net losses have been reduced significantly this year, and Zevra's revenue is projected to grow rapidly from now on. Zevra Fiscal 2025 Financial Forecast. Looking ahead, analysts project 2025 revenue of $101.03 million, up 327.88%, from 2024 revenue of $23.61 million and EPS of $1.20, up 152.63% from 2024 EPS of -$2.28. Wall Street analysts maintaining a strong buy rating with a $23.22 price target of 137.67% upside and the highest price target of $29, implying nearly 196.84% potential. ZVRA stock price performance and valuation. At the time this video was created, Zevra Therapeutics stock trades at $9.77 per share, gaining 3.6% over the past year and outperforming the S&P 500's 15.6% rise. However, over the last 5 years, the stock is down 13%, lagging the S&P 500's 101.3% gain, probably because of negative performance in the past. Despite this mixed history, the current valuation remains attractive. The company holds a PS-TTM ratio of 8.28, with a more compelling forward PS of 5.43 and a low forward PE of 8.13. With analysts forecasting strong revenue and earnings growth, these forward multiples suggest the stock is undervalued relative to its rapid growth trajectory and profit potential. Zevra growth potential. Zevra growth prospect remains strong, driven by several factors. 1. Miplyffa commercial success and market leadership. Zevra Therapeutics achieved $21.5 million in Miplyffa sales in Q2 2025, marking a 26% increase from the previous quarter and driving total revenue to $25.9 million. Since launch, 129 prescriptions have been filled, covering around one-third of the 300 to 350 diagnosed Niemann-Pick disease type C (NPC) patients in the U.S. Miplyffa's disease-modifying properties, demonstrated by its ability to halt disease progression at 12 months, gives Zevra a significant first-mover advantage in this ultra-rare disease market. The company has expanded market access coverage from 52% to nearly 79% of insured lives, reflecting strong payer acceptance and reimbursement willingness. With therapy costs exceeding $100,000 monthly, this commercial momentum lays a solid foundation for sustainable revenue growth and underscores Zevra's expertise in rare disease commercialization. 2. Strategic priority review, voucher monetization, and financial strength. In Q2 2025, Zevra Therapeutics completed the sale of its priority review voucher, PRV, for $150 million, marking a pivotal financial milestone. This non-dilutive capital influx, tied to Miplyffa's rare pediatric disease designation, elevated Zevra's cash reserves to $217.7 million as of June 30, 2025. The PRV sale contributed a one-time net income boost of $74.7 million, or $1.24 per share, sharply contrasting with the $19.9 million net loss from Q2 2024. Strengthened by this robust cash position, Zevra now has ample financial flexibility to invest in commercial expansion, advance its pipeline development, and pursue strategic acquisitions, without diluting shareholders. This financial stability enhances Zevra's ability to independently execute its strategic priorities across multiple programs, effectively mitigating execution risks often faced by smaller biotech firms limited by capital constraints. 3. European regulatory expansion and global market opportunity. Zevra Therapeutics' international expansion is a key growth driver, marked by the early submission of a marketing authorization application, MAA, to the European Medicines Agency, EMA, for Miplyffa in Niemann-Pick disease type C, NPC, submitted 6 months ahead of schedule. The European market has about 100 NPC patients, nearly doubling Zevra's total addressable population compared to the U.S. approval in Europe would open access to established rare disease markets with supportive reimbursement frameworks, enabling significant patient access and recurring global revenues. Zevra's early filing showcases regulatory expertise and positions Miplyffa for potential commercialization in 2026. The French Expanded Access Program, with 89 patients enrolled at the end of Q2 2025, contributes to early revenue and pre-commercial traction in Europe. This geographic diversification reduces dependence on the U.S. market while broadening revenue streams and enhancing commercial durability. Risks to consider. While Zevra looks like a compelling investment opportunity, we should be mindful of potential risks. 1. Slow adoption of Olpruva. Olpruva, Zevra's acquired drug for urea cycle disorder, UCD, despite achieving 79% market coverage, has experienced slow patient adoption. In Q2 2025, there was only one new prescription form, reflecting modest uptake. This slow adoption is attributed to the mature UCD market and high patient satisfaction with existing treatments. As a result, Olpruva's sales have fallen short of expectations, posing challenges for commercial growth. 2. Heavy revenue dependence on Miplyffa. Zevra's revenue heavily depends on Miplyffa, its lead drug for Niemann-Pick disease type C, which showed strong sales growth with $21.5 million in U.S. sales in Q2 2025. However, this reliance poses risks if market changes or new competitors arise. To ensure long-term growth and reduce risk exposure, Diversifying the drug pipeline through development and acquisitions is essential for Zevra's future sustainability and expansion. 3. Clinical and regulatory risks. Zevra's pipeline growth relies on successful progress in clinical trials and obtaining regulatory approvals. Recruitment difficulties for rare disease patients, trial delays, and complex regulatory hurdles pose significant risks. Failure to meet these objectives could impede clinical advancement and negatively affect the company's valuation, making regulatory and clinical execution key to Zevra's ongoing development and investor confidence in their rare disease therapies. Conclusion: Zevra Therapeutics shows strong momentum with explosive revenue and earnings growth, a robust gross margin, and improving profitability metrics. Despite a 5-year stock decline, its recent 3.6% one-year gain outpaces the S&P 500, highlighting renewed investor confidence. Attractive forward valuations, low price-to-sales and price-to-earnings ratios underscore its growth potential, while analysts project substantial revenue and EPS increases. Combined with a strong buy rating and significant upside targets, Zevra offers an appealing opportunity for investors seeking high-growth exposure in the biopharmaceutical sector. But remember, this is not a financial advice. What do you think about Zevra Therapeutics? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.